Hey guys, welcome back to the Road to Retirement series. This is going to be the very last episode of the year, and what a fantastic 2024 it's been. Market's been performing absolutely well, and I've actually hit a very large milestone. So I finally hit the £500,000 milestone. So it's fantastic to be able to reach 500,000 by the end of this year. If you're new to this series, what I do is transparently walk you through me and my spouse's investment portfolio, and that would include absolutely everything from pensions, ISAs, crypto, and track the performance of it on a almost monthly or a periodic basis and see how it's performing. I'll walk you guys through what I've been learning myself as I'm still fairly new to investing, and just take you on this journey to retirement, to FIRE, and see how I get there essentially. Though this tracker only goes back to August 2023, I've been actively investing since December 2021. Although for my pension, I've been making contributions that basically since I started working, so that's well over a decade. Before I jump to numbers, if you do like this content, please consider liking and subscribing, as it really helps the channel grow. I haven't made any significant changes to the template in the past month. The only thing I have added is a chart on the right hand side, because who doesn't like pretty pictures? And it's interesting to see how much the portfolio has compounded. So in August 2023, there's around the £200,000 mark, and just over a year's time, it's gone up to basically 500,000. And I'll touch on why it's grown so much as I walk through my individual positions. Let's start off with my pension, and this is one I've got with my current employer, which I've been working for the past decade now, and it's got a great contribution match scheme where I put in 6% of my salary and they put in 12% on top. So last month, the value of that pension was 145,946, and this month that's grown to 148,032 pounds. The unrealized gains are 43,697, and that's essentially a 1% change month to month. Do bear in mind the unrealized gains of 43,000 do not include any employee contribution match, which in my mind is essentially free money. They essentially just double my money off the bat, which is kind of insane. And I also increased my contribution match from 6% to 8% midway through this year, although I've tailored it back to 6% based on the budget that came out, which stated that pensions are now part of the estate and therefore subject to inheritance tax. So I'm still contributing as much as I want through the pension to get the maximum from my employer, but not any more than that. So in terms of my plans for 2025 for my pension, nothing's going to change. I'm going to continue to contribute what I do already. I've got an amazing employer match. So, the pension is one of the most tax efficient ways to grow your money. So this is just going to slowly compound in the background, and hopefully that snowball effect really starts to kick in. So I should see a nice, hefty, good sum at the end of 2025, depending on market conditions. Next up, we have my spouse's pension. So that went up from £18,319 to £19,572. That's a nice 7% increase with an unrealized gain of £3,018. My partner's pension is a fair bit smaller than mine for a number of reasons. One, she hasn't been working as long as me. Number two, her contribution match isn't as generous. And three, unfortunately, she was part of a default blended fund that her company put her in, which significantly underperformed the global index. And that's why it's so important to understand what your pension is invested in. So if you haven't logged in and checked it out, or don't know the value of it or what you're invested in, please do, because it could significantly change how your pension performs in the next 10, 20 years. The general principle is if you're younger and you've got lots of years till you need the money, then you should be in more equity. And as you get closer to retirement, that can shift into more bonds. But again, not financial advice, but that's the general principle most people go on. In terms of the plans of 2025, we're going to continue as is. We have also created a SIP for her this year where we add in additional pension contributions above and beyond what she puts in with her employee. Because again, pension is one of the best ways to grow your vehicle, and we get that pension tax relief as well. The one thing I'm bearing in mind is the disparity of the size between our pensions. I think if we get to the point where her pot's big enough where she can maximize the personal tax-free allowance that we get in the UK just from her pension, that would be great. So then we can be a bit more tax efficient in the way we pull our money when we're in retirement in the most tax efficient way possible. The main reason why my portfolio has exploded in the past year is because of the investments I made in my free trade ISA. So last month, the value of this was 211,103, and that's ballooned up to 242,804, which is a quite significant 15% increase. And the unrealized gains of that amount is 169,476. Just to give you guys some insight to what I've invested in my ISA, I brought up my free trade portfolio, and I do have a separate video series where I go into these positions in detail. So if you haven't seen those, please check those out. So my two real big positions and my outperformance are Palantir. So Palantir is at 142,084, so that's up 578%. And Rocket Lab is 19,361, and that's performing even better at up 610%. And if I'm totally honest, I did not expect this kind of performance in 2024 yet alone, ever. I think it's just been a combination of the right things. AI has been the hype word of 2024. If anybody mentions AI, he gets a massive price increase. Trump's been elected, so I think that's going to be great for the stock market and Palantir specifically. And I'm 100% sure there is a large portion of luck involved here. I was heavily buying Palantir before it was even really talked about. So if we look at the kind of price chart for this, so I was sort of buying Palantir back in early 2022 when it was in the $5, $6, $10 range of buying quite heavily. And since then, it's just kind of exploded. You can see I've got 2,260 shares, and my unrealized profit in just this position alone is 121,153. Just to set expectations, I do not expect the stock to perform like this every single year for the next 10 years because, that's just not realistic. I think this stock is now quite richly valued. So I wouldn't be surprised of a significant pullback in 2025, and that's fine. It's just a stock I've got high conviction in, and it's paid off so far, and it's something I'm planning on holding for the next 15, 20 years anyway. I have trimmed some of these positions back just to take some profit because that's sensible. But yeah, I've been very fortunate with this stock, and we'll see what 2025 brings for Palantir. In terms of my plans for 2025 for my ISA, I'm going to continue to maximize the £20,000 limit. I'm in a fortunate position where I've got enough income where I can do that. I'm still sitting on a decent cash size position in this ISA account. So if there are any major opportunities in 2025, I'm going to buy it. I still continue to invest in individual stocks because, that's just what keeps me interested, and I've got good performance so far, so hopefully that continues. But yeah, the plan is to maximize this. The ISA is generally used as a buffer between when I want to retire and when I can take from the pension. I guess the bigger this gets, the potentially earlier I can retire. So yeah, it's something I want to keep a close eye on, and hopefully it's a good way of bridging that gap and retiring even earlier than I want to. Next up, we have my spouse's Vanguard ISA, which is made up of purely the global index fund. So last month, value of this was 22,131. This month, it's 22,440, which is a 1% increase, and unrealized gains of £2,440. In terms of 2025, I'm not planning on adding anything to this position. Instead, she has now a trading 2-on-2 ISA, which I'll touch on next, which is where we're looking to make any additional ISA contributions, and it gives us that flexibility of buying individual stocks if we want to. So following on for that, the trading 2-on-2 ISA for my spouse, last month it sat at 2,627. This month it's 2,663, which is a 1% increase, and an unrealized gain of £207. We were hoping to add more to this position and even potentially maximize the £20,000 limit in this ISA for this tax year. Well, that may be unlikely, and that's just because life and we've needed expenses and other things such as holidays, experiences. I appreciate this is a large portfolio. I'm really trying to build it up, but at the same time, I'm trying to take a balanced approach where it's yes, it's great to grow your money, but also what's the point of growing it if you can only spend it when you're old? So yeah, we're trying to take a balanced approach where we are still spending money on holidays and things we like and things we enjoy, build up those experiences while we're young, and we can still do those. But yeah, no, if we've got spare cash lying around, I'll dump it in the ISA. If not, it's not a big deal. Next up, we have the free trade GIA, or the general investment account. So that went up from 18,557 to 20,283, which is a 9% increase. And the unrealized gains are £8,083. Just for a bit of context, I opened this GIA during COVID. That's because I maximized the ISA limit and I still wanted to buy stocks I think were very undervalued. So just to give you guys a quick look, this is the free trade general investment account, and my top holdings are the big tech stocks, so Meta, Alphabet, Amazon. And as you can see, I did time the market quite well with these, especially Meta, which I think was ridiculously undervalued. So this portfolio has outperformed the S&P 500, but I do appreciate it's not a tax efficient wrapper. So anything I sell in this account is subject to capital gains tax and dividend tax also. Next up is the Vanguard general account. So last month it was 17,806. This month it's 18,110, which is a 2% increase, and the unrealized gains is £5,253. My current thinking with the GIAs is I do want to sell some to maximize the capital gains allowance, which I believe is £3,000. What I might do is sell out of all of my Vanguard GIA, which will give me a profit of just over £5,000, which is obviously over the £3,000 limit, but offset that with some of the losing stocks in my GIA, and hopefully that will offset the tax allowance a little bit. I'm probably going to pay a little bit of capital gains tax, which is fine, but then I can reinvest that money in through an ISA or a pension, but I've not yet decided what to do. If you guys got any thoughts on the best way to approach this, please let me know in the comments section below. Next up, we have my work shares for the company I work with. So last month it was 17,950. This month it's 17,597, which is down 2% in a month. The unrealized gains at the minute is £7,030. As I've mentioned in the other videos, I do get a decent sized discount on my work shares, hence why it's a decent position, and it's performed quite well. I'm going to continue just to invest a tiny bit every single month, although I may take some profits in 2025 and the next tax share, but we'll see how this progresses. Last but not least is the crypto portfolio. So last month it was £15,012. This month it's 15,744, which is a 5% increase, an unrealized gain of £11,600. So if you weren't aware, my crypto portfolio is made up of probably around 90% Bitcoin and 10% pretty much everything else. Again, I was very fortunate of buying a lot of this during the COVID dip. I believe I bought Bitcoin around the £25,000 mark range. I'd have to go back and check. But yeah, very fortunate with the timing. It's performed quite well. My goals is not to add anything to crypto. I think I'm happy with my position as it is. So, if Bitcoin does perform amazingly well in the next 10, 20 years, then I've got a slice of that. If not, then, it's not going to have a major detriment to my overall portfolio performance. So looking at the total value, last month it was 469,451. This month it's 507,245, which is up 8%, and a total unrealized gain of 250,804. And if I'm totally honest, looking at numbers like this, it's all a bit surreal. Never would I imagine to get to $500,000 between both of us in our early 30s, let alone age of 40. But we're in a fortunate position where we've got a fair bit of disposable income that we can chuck at these investments. Obviously, Palantir's been a big part of this, where it's just majorly outperformed. Although I am expecting a dip back, so it's great as it is, but I wouldn't be surprised if this portfolio takes a massive dump in the early part of next year. But that's part of investing. I'm not going to panic. A lot of these stocks I've bought for the long term. The good quality companies, I'm going to hold them basically till I retire. So, I think we're heading in the right direction. We're going to continue to invest as much as we can and see what 2025 brings for us. Taking the percent rule table at the bottom, this gives us a very, very high level finger in the air figure of what we could potentially pull every single year out of our investment portfolio for the long term. So 4% will give us 20,289. I would probably lean towards the 3% rule personally because I'm a bit more conservative. So that's 15,217. And especially if we try even earlier, let's say at 50 or 55, that pot of money has to last longer. So I'd rather lean on the 3% rule rather than the 4 or 5 personally. So that will conclude the December update. It's been a great year. It's been a well-received series, so hopefully you guys have found it useful. You're learning something, and I am learning from you guys from the comments you drop in the bottom as well, so it works both ways. So hopefully there'll be many more of these in 2025, and I'll see you in the next month's update.